Un Unrivaled Nation, I'm super excited to bring to you Rui Ma, who runs Tech Buzz China podcast, and I believe that she will forget more about China tech than I and most investors will ever, Western investors will ever know. And so that's why I wanted to do this special exclusive interview. Here it is with Rui Ma, where she can share some of her thoughts about the big trends that we're seeing in China. Regular viewers know that I'm a shareholder and a fan of number of China stocks. It's about 25% of my investment portfolio. So I'm very interested to hear what she has to say, her insider take. Maybe I'm all wrong. So that's that's the question. So we'll be hearing her take on that. I've talked about Alibaba on a regular basis, how I personally own it, and I think the valuation is quite compelling. So now I'd love to hear. First of all, Ray, why don't you give an introduction about who you are, Tech Buzz China, all that sort of stuff. Tell us about you and what you're up to.
Yeah, sure. Well, first of all, preface it with saying that none of this is investment advice.
Absolutely.
I, in fact, do not invest in anything myself personally, for compliance reasons. And I mainly talk to investors about the sort of long-term strategic and vision of companies, and hopefully more of their long-term value. And I actually don't pay attention very much to short-term stock price fluctuations at all. So I don't have any price targets or anything like that. A little bit about myself. I was born in China, but grew up in Silicon Valley where I now live, and, studied engineering, kind of lived through the first dot-com bust when I was in college. And because at the time, I think just my parents were immigrant engineers, I just never knew anything different. So it never occurred to me to even consider another field of study or profession. I unfortunately, though, was not a very good engineer. So when I came out, I actually ended up doing technology finance. So investment banking, doing M&A. Actually, just to give you a sense of how old I am, my first deal was the acquisition of Skype, not by Microsoft, but by eBay. So
Wow.
that's how long ago it was. Yes. Okay. Anyways, this is, when we're still using Blackberries and all that good stuff. So then in 2007, just actually for purely personal reasons, I didn't have a strong point of view on the Chinese economy or anything like that at the time. I was just following my fiance at the time to China, and ended up going there and living there for 8 years, working primarily in tech. But actually, my first job there was in real estate investing. So it was all in finance. It was all in investing or advisory. And I had a really great time until the end of 2015 when I moved back here to be with my family, here being Silicon Valley. And, didn't really think about China or China tech for a couple of years, but in 2018 started this podcast called Tech Buzz China as a favor, honestly, and as for fun. For my friend who's the founder of Pandaily, which is a Chinese, which is an English actually website on China tech news. And it just grew from there because I realized very quickly, having not looked at the industry for 2 years, that actually a lot of stuff happened in sort of the 2 years I wasn't paying attention, and Chinese tech companies were getting much stronger. There was sort of exponential growth of innovation and strategy, and everything was just really interesting. So I decided to get back into it. And then in 2020, I started doing this more full time. So we have a podcast, we have the community, and basically I try to make deals happen by introducing fund managers to private companies. Or at least that's the thesis right now. We've sort of working on, a few of the first transactions. We'll see if it goes through.
Got it. So this is in the private arena that you're connecting private companies to,
exactly.
So this is more on the venture side of things, earlier stage.
Yeah, exactly. My background in China was primarily in venture. The last 4 years I was there, I was doing actually seed stage investing.
Wow.
And I just happened to be there at a very good time, because when I started, which is the beginning of 2013, that was right before the country really started pushing entrepreneurship. So you can think of it as prior to 2014 or so, actually, startups were not hot in China. You were kind of a weirdo if you went and did startups. You were, kooky, right? You didn't care about your social status. It was hard for you to find funding. There weren't that many success cases. Of course, there had been the first generation, actually 2 generations really, of Chinese companies going public in the US, but they really weren't that large, right? So the exponential growth that we see really came about after 2014. I just like lucked out, happened to be doing that when that was happening. And I like to joke, it hurts me a little bit actually every time I have to talk about this, but everyone I worked with at the time, we were all sort of like principal level investors in venture, but all of them now are big time GPs managing $1 billion. And here I am. I'm like, hi, do you want to come on my podcast?
Well, I'm very grateful that this is the journey you've taken in terms of sharing your wealth of knowledge with the more, just the general populace like myself. So I'm grateful that you're on this journey, even if it doesn't mean you're managing billions right now. Maybe in the future, but certainly by connecting the folks that are managing funds, significant funds, to, let's say, venture investing or private investing, you definitely have to keep your finger on the pulse for what's developing, what has developed, what's quickly growing, and maybe what's going out of favor. And so I think to start off, I'd love to hear your thoughts in terms of what are some of the big tech trends that you're currently seeing in China right now, the things that are growing, let's say, parabolic, things with really exceptional growth right now, where you could see it being sort of a game changer in the next, let's say, 3, 5, 10 years?
That is, well, so I think there are 3 main areas that people are investing right now, right? So actually, I should say 4. So I'll just start off the first one that's really obvious, and that's just sort of like deep tech. Deep tech specifically meaning choke point technologies. That's what the government's term is for it, but it's basically technologies that China needs to keep up its current status quo. I'm not saying stuff that they don't, stuff that like hasn't been invented yet, like going to space, going to Mars or whatever, but I'm just talking about simple things like
semiconductors.
Yeah, exactly. Semiconductors being one of the main ones. Various parts of the semiconductor supply chain that China does not know how to use, how to manufacture, or how to make, right? So that is something that is attracting a lot of attention right now. It is not actually that big in terms of venture, because a lot of these investments, while they're very crucial to the economy, are not necessarily great on an ROI perspective. So they require a lot of capex upfront. So you see this as a lot of government intervention. But I just wanted to get that out of the way. So that is something that is growing. Venture tends to be at the the more abstract levels, right? People are not actually investing in foundries much. They're more investing in the chip design firms, such and such, right? But that whole space will probably go from, very limited right now to a much bigger part of the economy, in the next, obviously the government wants it to be as quick as possible, but I would say this will probably take a while because there's a lot of fundamental science involved. But what actually like VC sort of market players are investing in is sort of these other 3, the other 3 being consumer broadly, and consumer, it's no longer platforms. So the platforms, the digital platforms are kind of not all, like they're not played out, but there has been so much investment in them already. And they're already so expensive to acquire new customers. You can think of it as, this is infrastructure. These are the roads, the highways have already been built. Now it's time to make the cars, right, to go on top of the highways, right? So brands, consumer brands, and that is both online and offline. And within this subset, I would tease out a separate category, which is companies that can go international. And now there's this very strong belief that Chinese brands, domestic brands, are not only kicking butt at home because they have supply chain advantage, they have marketing advantage, et cetera, but they're also able to go abroad. And we're just seeing the emergence of that. So there's going to be like the metaphor that people like to use, which I'm not sure if it's completely historically accurate, but like in the 70s, let's call it 70s to the 90s of the last century, Japanese brands, right, all of a sudden experienced this boom in quality and then started going abroad and becoming global brands. And there is a lot of enthusiasm right now that that same trajectory could be what we see for Chinese brands. So, and the final thing, the 4th thing would be just enterprise software in general. Enterprise software has been extremely small part of the economy in the past, right? So I like to joke that if you look back 2 decades in Silicon Valley, basically enterprise investing has pretty much consistently been like 80% of dollars deployed, right? And if you look at public companies listed today, right, maybe not by market cap, but like surely by sheer just number of companies, enterprise software has many more entries. The situation in China had always been the opposite until very recently, I would say, called 5 years ago. It was predominantly consumer internet investing. And that's actually something that you would expect, right? It's just easier to push out tech to consumers, especially when we have something as accessible as the smartphone, right? And then enterprise typically needs higher quality development, more stable, right? Stability, right? And it has to be a focus on productivity, not just, entertainment, et cetera. So all these factors combined, we see a surge in enterprise software investing as well. And we're starting to see this year and next year, there are starting to be some of these companies that are at IPO level, but it's just starting. There's probably only 10 companies, definitely less than 20 companies in China right now, enterprise software that are, startups, right? Not spin-offs from existing giants, but pure independent startups that are at the $100 million revenue level, because that's what most people think of as like a threshold for listing publicly.
Got it. That makes a lot of sense. So to broadly understand, I think I got three of it, which is deep tech, effectively the choke points that China wants to address just for long-term trajectory. You're talking about establishing potentially global brands that create that sort of respectability, high on the IP aspect where you can have hopefully attractive margins. Also looking at enterprise software, and you're actually seeing a lot of the major historic consumer platforms actually making those investments.
They're making a lot of those investments. So besides maybe I focus too much on the cross-border and international globalization aspect of it, but there is huge opportunity right now for domestic brands just to expand domestically, because actually in China, if you compare it with there was this McKinsey study, it's a little dated from 2017, but you can see very clearly the top 30 brands, right, in each consumer category. There's much higher penetration of foreign brands in China versus the US, right? And for some categories, it's like it's a difference of like tenfold.
Got it. So building out a greater sort of in-house built brands in China to feed the domestic market.
Exactly.
Consumer products. Got it.
Because the brands, because these were typically previously just pure manufacturers, right? China was just the factory of the world, but now you're having more design talent, you're having better digital infrastructure, right? So by the way, the way these domestic brands tie back to technology, which is what I focus on, is that most of them tend to be digital in nature, right? They start off by having sort of a DTC, direct to consumer online nature before they expand offline, because online's typically a little cheaper for you to start building that momentum before you build out offline distribution. Got it.
Now, this raises a bunch of questions for me. One of which, and we've seen some of the Western investors, for example, Kathy Wood, she runs the ARK investment funds. Effectively, she's been bailing on Chinese tech lately, just, selling it off despite seeing these, several of these names drop 10, 20, 30% in a very short time. And so and she sort of had a thesis of saying, well, wait a second, these sort of soft tech platforms are going to be less in favor versus hard tech. Do you see that as a multi-year headwind for, let's say, these major consumer platforms in the years ahead, or is this sort of a reset that we've seen? And that leads to a broader question about the regulatory environment right now. But let's just start with that aspect of like soft tech being consumer platforms like the Alibabas of the world. What are your thoughts there?
Yeah, so I think that I've seen people use this argument, and what I would say is they're not wrong, but I disagree to the degree to which this will happen, right? And that's because if you consider, yes, exactly, the China's regulatory environment, the national policy, it is not about like everyone, let's go and invest and make these choke point technologies. First of all, that can't even happen, right? Because you can't, like, talent is not fungible. You can't just take, someone who's working on front end dating app or something and then be like, now you are going to go work on semiconductors, right? Because you're, a quote, like a STEM graduate. So now you can do this. So it's not like that. You can't just make these technologies, right? If they could make these technologies, they would have done this a long time ago, right? A lot of it has to do with the readiness of the market. And by the way, like the US sort of trade policies and the trade war and the sanctions on the technology actually created this market. So now you have this market, right? Number two, I think that it would be a mistake to say that the Chinese government doesn't want people to focus on quote unquote soft tech or consumer tech, because I can point you to many high level meetings where they specifically discuss this, right? That's because the government's strategy is about increasing domestic consumption as a core pillar of development. Okay, and when you want to increase domestic consumption, that is about upgrading like the lifestyle of the 1 billion people living in rural China, right? So again, to reset, about 400 million people live in sort of urban China and live lifestyles that maybe you and I can really recognize and resonate with. But then there's like 1 billion people living in more inland, and they live in much, worse off conditions. And that part of the economy is actually still growing, according to some investors I talked to, expected to grow at 10% a year.
Wow.
And so that's actually why a lot of VCs are really excited about these domestic brands and, investing in, especially ones that focus on rural China, because where else are you going to find a billion population that's still growing at, maybe they're being optimistic with 10%, but it's still like significantly faster than many other large economies, right? And this is a, relatively speaking, like well endowed in terms of infrastructure, right? Digital infrastructure, payment infrastructure, et cetera. So this is still a really good market. The government has specifically said they want to develop this, right? They want to have the rest of rural China catch up to urban China. And specifically, this means increasing the digital economy, which, by the way, includes things like virtual goods. They literally include that as a key aspect of, increasing rural consumption. And in fact, they even say, I was just reading meeting notes from a high level, one of these think tank meetings, where they literally said, like, not only do we want to increase that in our own country, we've seen how this helps the economy develop. We want to export this to other countries because we see this is how you get economies going. It is not just about building, roads and dams, right? It's about building the quote unquote new infrastructure, which is cell phone towers, which is, logistics. So you can do e-commerce and these platforms so you can trade in virtual goods. So I guess maybe I'm rambling a little bit, but my emphasis would be that while the government absolutely wants to incentivize and really direct resources to these choke point technologies, there is also this they're not giving up on the consumer part, the quote unquote soft part of the tech stack either, right? They recognize that's actually what's really helped the economy grow in the past. If you didn't have platforms like Alibaba or Pinduoduo or JD and the logistics they invested in, you wouldn't be able to have the growth in rural China that we've seen in the past decade. Yeah. That just wouldn't have happened with just purely, highways and dams, right?
Yeah. So this is what you're touching upon here, I believe, is a misperception, I think, where a lot of folks are just saying, well, if the CCP is saying this is where they want to direct their efforts, that means all these companies will languish. What would you say are some of the top misperceptions that you see Western investors have right now relative to your takes? And because I love, listening to your takes, and I also love reading your comments on Twitter, just because it's like, man, this is just 180 from what I think a lot of Western investors just think. And I'll get into another question after this of like, hey, a lot of Western investors are like, uninvestable. CCP risk is too hard. So let's start with what do you think are the big misperceptions that Westerners and Western investors have?
I think that like just in general with regards to China, there is this perception that like China is monolithic, right? That the party, this mythical party, is like so in control of everything, and everything. It's completely top down, right? And it's just this one coordinated body, right? Like one mind. I think many people probably think it's like literally one individual, and then just like 1.5 billion people just boom, right? Or just ripples out from Zhongnanhai or something. That's clearly not true, right? You have, and like to simplify it very, like to a very elementary level, I would say, think of it as, the US here, we have state government, federal government. In China, it's not quite like that, but it's kind of similar, right? You have local governments who people I've worked with a lot, actually, because I try to fundraise from them when they were, really investing hard in startups. And they care about like job development, right? They care about keeping the best companies in their cities, right? So they're willing to give all these tax breaks. They may or may not care about like, national effects, right? They probably care about the local environmental damage, maybe don't care about, things beyond their city or provincial borders, right? Makes sense, right? Because that's what they're incentivized and sort of tasked to do. And then you have the central government who cares more about what is the health of the country as a whole, right? What is good for this city and this local economy may not be great for my national objectives. So a great example would be like Ant, right? When people talk about Ant, and I think the Ant is a pretty complex situation, but teasing out one thread, you have Ant getting these specific licenses from a local city, the city of Chongqing, and then there were other problems of like the ministries weren't totally aligned on who is supposed to oversee this, right? But that city has every incentive to be like, hey, we'll give you all the licenses you need to go lend all the money you need because we want you to bring whatever 10,000 customer service jobs, right, to our city, and we want the tax revenues because it's all being booked here and whatnot, right? But the national, the PBOC, the People's Bank of China, and the national government would be like, hey guys, like that seems kind of risky. Yeah. Or your interests are actually a little bit at odds with mine, right? So that's why it can be difficult to disentangle, right? Like sometimes you see the government say one thing and then the government ends up doing another thing, but that's actually just because there are different parts of the government that have different interests. Mm-hmm. Right? But ultimately, at the end of the day, the sort of red lines, right, the boundaries of what is okay, not okay, is still going to be set by the central government. Yeah. So that is true, right? But those are sort of like, again, the really, really large boundaries. Within that, there could still be a lot of things happening that the companies can take advantage of.
Got it. So there's this, if I understand this correctly, so there's a lot of perception that the CCP is just governing everything, whereas in reality, it's really stepping in when certain companies or trends are getting close to a red line and sort of saying, hey, otherwise it's maybe local forces that are really acting, that are driving the incentives, local market sort of forces. And then when you get to a red line, that's when the CCP sort of says, okay, wait a second, this isn't really aligned with what our main objective is here.
Yeah, that's definitely one thing that happens, right? So another thing that happens, I think, that is maybe not super intuitive to other people is like what China often does, what's called the sandbox method, which is they'll basically have, they'll be like, oh, we're thinking of this policy. Well, we're going to allow this new innovative policy, right? And we're going to allow like this city, that city, this province or whatever to set up all of these pilot zones. Where we're going to try out this policy. We may let them try out for a few years. And sometimes, by the way, these policies are very strange, like it could be very aggressive, right? But we'll let them try it out. If it works as we want, then maybe we'll roll it out nationally. If it doesn't, then we'll just stop it, right? So you can't so sometimes when you see like, oh, China is allowing XYZ, what actually is happening is they're allowing XYZ in a very specific, maybe literally like one industrial park, right? In some city, in one district, right? And then that does not mean that is going to be China's policy, right? You have to really differentiate between the experimental things that are happening versus like, okay, oh, we tried that and we have decided it's going to be this way.
Got it. So a lot of Western investors, I feel like a lot of investors in general have been burned lately by some of the regulation from the CCP. I think the major platforms have lost something like cumulative $1 trillion worth of market value in just a few short months. You sort of have whiplash with the DD IPO and then talks of it going private, which that's a whole other mess where it seems like they just weren't listening to what the CCP was telling them to do. But I think the one that really got a lot of investors sort of edgy was sort of the crackdown in the ed tech space, or the for-profit tutoring and education space, and where a lot of these places were effectively, the business model is arguably being transferred from a profit to a nonprofit, and that is the thing that makes a lot of capitalist focused investors go, whoa, is that sort of
that's the definition of communism?
Exactly. Exactly. And that pressed a button for a lot of investors. And I think that caused a lot of the selling that you saw over the last few weeks. And so I'm curious what your thoughts are, because that was a key line where a lot of folks are like, now this is just uninvestable, because what's going to prevent the CCP from saying, hey, this is the next sector, or Alibaba, you're going to have to pay 50% taxes or something like that, or 70% tax, seeing that sort of ramifications for other profitable industries and potential investments that could work out. So I'm curious your take on that it won't, whether or not you think it'll just be, hammering down on more sectors to come.
Yeah, well, excuse me. I also agree, by the way, that was really scary in a way to read this. And the Western investors' perspective is not all that different from the Chinese investors' perspective. And at the same time, in mainland China, I think everyone was just like, whoa, what happened here? That's really severe, right? Like this industry really got sort of wiped out. I think that, like, I'm not you don't have to take my word for it, but basically the government has come out and said, like, but by the way, guys, that was a one-off. That was something was specifically targeted to this industry. We can talk about whether or not like they did it in the most transparent or like well-communicated way. Probably most people would say no, because they even said, hey, guys, sorry, that could have been communicated better, right? But I don't think this extends to other industries. I think it is very unfortunate that this is how it rolled out, because, by the way, this policy is hugely controversial in China as well, right? And because it's not necessarily that people don't agree with the after-school tutoring being I think some people call it sort of a parasite to society, like not really adding a lot of value, just stirring up anxiety and then actually kind of messing up the entire education system. But at the same time, to completely decimate them, as what has happened, without providing a lot of clarity, by the way, to parents on what's going to happen next. I think that wasn't necessarily great, right? So a lot of parents, by the way, are very much like, well, so you took away the tutoring, and not just the tutoring, by the way, the after school tutoring, they actually banned the apps that allow you to take a photo of problems and then get the answer. So those are banned. Those were super popular in China because homework is very onerous and it can be very difficult. So, kids would just use their smartphone, snap a picture and be like, what is the correct answer? And the parents are like, well, I don't know how to solve these problems, right? You took away the tutors and you took away this tool. No. Are you expecting me to solve these really hard, math problems and whatnot, physics problems? So it wasn't super well thought out. I do think that I do think that the way it's going to land is not going to be as harsh as people necessarily think. First of all, the rules do already say that the school needs to provide some of these services. So some of businesses can presumably pivot into serving the schools, right? So it's not that China wants to kill off all educational help. China just doesn't want it in the way that it was currently being delivered, which really favored certain business models and doesn't really favor like learning, right? So again, we'll see how it turns out, but the optimistic view would be if the schools offered this, and they control the advertising, and they control the quality, that students can still get the help they need, but not with this, a lot of the false advertising that was happening and like the crazy sort of high prices, etc. And also it was sucking out teachers from the system. So the teachers were like, well, I'm not going to teach if I can go tutor and make a lot more money.
That's a really nuanced take, because effectively you're saying instead of the direct to consumer model, maybe it needs to be more of a B2B model where these institutions are serving the school, and the school is a public service, and just making sure the budgets for the schools get bigger. So that way the students are going there. So that way it sort of goes back to, this isn't so costly to raise new kids. Is that the right way to think about it?
Well, what I can say is that it's unclear exactly how this is going to happen. This is why it's still very controversial. So if we revisit this in 6 months after the new school year started, maybe there'll be a lot more clarity. But technically the schools are not supposed to offer curricular instruction either, right? Because the idea is that the schools should teach everything you need in the schools, right? And imagine the inequity that would happen if you are not getting taught, if you're only getting taught like 50% of the material you need to succeed in life in the schools, and everything else is sort of in after school tutoring programs, which was kind of not that different, by the way, of what was actually happening on the ground in China because of these distorted incentives. So again, everyone can understand why the direction that the government wants to push in. I think that the way it came out was very sudden, and the alternatives provided left people with a lot of question marks. So, but I do think that this is very, very specific to EdTech, right? This is the one industry where I think you see it has like hugely distorted a very, very important public good. So education, healthcare, and real estate are sort of like the main main costs, but also the main factors like any population, right, would want to understand or have under control, or feel good about. These are the three things that people care about when it comes to their quality of life, right? And this was really being adversely impacted by some of the players.
Got it. So to make sure I'm on the same page, what you're saying is effectively you don't see the CCP at this point sort of laying down the hammer on, let's say, other industries, wiping them out over a weekend or something like that. That's not really being telegraphed right now. Right now that is
not being telegraphed. Again,
yeah. Could it change?
It could happen. I don't know, like anything could happen, but I would say it's very, very highly unlikely, right? So I think the other industry that a lot of people are worried about is gaming. And I think there has been, very, very high level information being given out by top central government that they don't consider this to be something that needs to be like a cancer to be cut out.
Yeah, the spiritual opium, right? That's the
phrase. So again, what I would say to that is like, that's not, it's one piece. And I think because of all these ongoing regulations, people really latch onto it like, oh my gosh, this is a signal of something much bigger. But that word has been used in, media in the past, not opium, but like heroin, cocaine, and in fact, the percentage of negative articles about gaming specifically in People's Daily, I'm not talking about all over the internet, because I think on the internet it's more negative, but like for People's Daily, the state media mouthpiece, it's actually been largely positive. I think one scholar did a big data run in the last 5 years, only 13% of the articles were negative. Oh. Yeah. So it's been seen as an entertainment venue. It's like new culture. Yeah.
Got it. Yeah. I honestly, I feel for the parents there where it's like, now I just lost my tutoring and now I might lose games for my kids. Like, well, what am I going to do with them after that? So, but this.
that is, I mean, again, I think gaming, the minor gaming is very much a concern. China does care a lot about content for, how its youth are spending time. Right now, the most severe restrictions are 12 years and younger. There's various levels of other restrictions on 16 and 18, but it wouldn't surprise me if it became harsher all the way up to 18. And it wouldn't not surprise me if other people came out and said, like, reiterated spiritual opium or whatever, because there's lots of people that feel very strongly about this. But for this to be a policy level, sort of like completely cutting out the entire gaming industry, that makes no sense, right? I would say the most extreme I can imagine it is, okay, it becomes illegal for minors to play games. But could that extend to the entire gaming industry? I don't think so, right? There's no indication of that at all. And even like what I just said earlier would be like a very small possibility, because again, the government's done a lot on this. There just needs to be a sort of technical solution. So now 5,000 gaming companies are now on this one system, right? So they can all collaborate and make sure the same minor isn't playing more than whatever it is, 90 minutes a day on the weekdays.
Got it. And so whenever you see this sort of direct, heavy-handed, I'd argue, interruption with the marketplace, it does stir up a lot of anxieties, and that's been, sort of, I think, the subject, a lot of the subject of this conversation is like misperceptions, big risks, like, and I think one of the legacy anxieties that you see brought up every time some sort of big intervention happens is the general unease about the variable interest entity structure, where a lot of folks say, oh man, is it that, and even if the CCP isn't bringing it up, it just stirs up that general anxiety that's like, oh, maybe this is a legal structure where these, equities that may trade on the US exchange, may trade on the Hong Kong exchange, they're going to get somehow taken away by the Chinese Communist Party. They're going to say these VIE structures are no longer acceptable, no, they're void. What are your thoughts on that, whether or not they're sustainable, or, if there's any legitimacy to that concern that, hey, these major companies that are publicly listed using variable interest entities that, you could wake up one morning and, global investors, effectively face a donut, a big zero for what had previously been a much bigger value.
Yeah. Okay. So again, not investment advice, not legal advice, but my understanding.
This is entirely educational. So
yeah, my understanding is, so the VIEs were created purely actually for foreign investors to invest in restricted industries, which are literally like industries you cannot invest in, right? By the law, right? So of course that makes this is like specifically like a loophole for you to invest in something that you're explicitly not allowed to invest in, right? So I understand the anxiety, but I think what's happened in the past couple of years is that you have seen, because this structure was meant to for that kind of loophole, then the legal system in China like didn't interact with it, right? So you can see it very clearly in sort of like antitrust, not like 100% of the time, but like anything that involved VIE, like it was hard to know, like who is in charge of, like whose jurisdiction is this basically, right? If this is like basically a gray or a loophole. But you've seen that in 2020, especially, maybe going back earlier, but especially 2020 with antitrust, it has been established that VIEs are not exempt from antitrust regulations, which to me, not just to me, but to other lawyers, you can go and look up some legal opinions. All the big law firms who practice internationally have written about this. To me, that actually legitimizes the structure, right? Because it's now basically saying, okay, we're actually going to appoint people to oversee these structures. That to me means that now there's someone in the system accountable for your behavior. Then and you are now subject to all the other same regulations as everyone else, then I've basically made you legitimate. What it's done is that where before the Chinese government is like, okay, we're not going to touch this, it's kind of gray area. Now we're like, okay, now they're like, okay, we're actually going to incorporate you into our legal system. Okay. And, but we're going to put restrictions around it, right? Before it was sort of like this one eye open, one eye closed thing. But now, I guess what's scaring people is that when you go list abroad, which is primarily VIE structures, there's going to be now a security review. I would not be surprised, by the way, if there are other reviews down the road that are different types of reviews. But that, to me, again, legitimizes the VIE structure. It just means that the government now is like, we're going to regulate this, and it's no longer going to be a loophole. We've made it part of our system. That's what a couple of lawyers I've talked to also believe. But either way, right now, the current situation is, I don't think anyone has to worry about it. There's no indication that the entire VIE structure is at risk, right? What you do need to realize is that now the government is going to oversee it or regulate it more. So before, it could be just that, oh, you just set up a VIE and you could do anything. Now the government's like, okay, I'm going to put a smaller box around what you can do.
Yeah. So I think we've covered a lot of the misperceptions, uncertainties, scary things for investors or folks that are participating to consider. Now I want to take, because I try to have an optimistic bent when I think about the future. What do you, let's move to the stuff that wakes me up, that I'm excited about when I wake up in the morning. And so what do you think, and I'll let you choose which question, up to you. Which companies in China do you think are either unrivaled, and hence the name of the channel, or do you think have the strongest growth prospects in the years ahead? So like the strongest, I'm not talking about stock price. That's not what I'm interested in here. I'm talking about the fundamentals of the business, where you think there's something special about this business, or they're just tapping into something where it's clear they're aligned, and you think they're just going to grow at a good clip in the years ahead, if any come to mind. And if it's too hard and you want to pass, totally understand.
No, I mean, I feel like I always give the same answer. So I was trying to think of not the same answer, but I would say right now, like, to be honest, it's still ByteDance, right? My money's still on ByteDance. It's a very interesting company in how it's married, not just the I would say it's a very interesting company in how it's married a lot of the best practices from Silicon Valley, and actually like globally, like, because the founder is a big fan of a lot of the Japanese entrepreneurs as well. So he's like really fond of like taking sort of like these really great points from global innovation and global strategy, and then incorporating it into this like entity where he's taken some of the really interesting things that he's learned from China and the Chinese ecosystem, which is, let's face it, let's be honest, like, it's all pretty advanced in terms of consumer internet technologies, especially on digital entertainment. And then a lot of these best practices from the West. And you see that I think you can see it in its expansion, right? That TikTok is the only Chinese company that's, experienced unrivaled success abroad, right? And of course, it can still be subject to geopolitical tensions and these other risk factors that are, I think, frankly, outside of its control. But aside from that, this is a company that's done, I think, extremely well, because it's been sort of thinking of itself as a global company from the get-go, which is very rare for a Chinese company. It's also very different for a Chinese company to think that, because they don't have other companies that could show them the way. Whereas if you are in the US and you sit in Silicon Valley, sure, not everyone's thinking maybe about being a global company from the get-go, but I would guarantee you like a much larger percentage than entrepreneurs in other countries, right? Because you're so used to, the giants from the United States being also giants abroad, right? And this is not the case for Chinese companies. So ByteDance is really the first one to do that. I think they're really someone to watch, but they also do happen to be in the content industry, which also makes them extremely risky. So we will see.
Yeah, that's a super fascinating study, because, like, as you mentioned, geopolitics, political events could definitely play a role. I think, connecting some dots, supposedly they were one of the largest customers for the Alibaba cloud business. And in order to deal with the data concerns, they effectively said, hey, we're going to move from the Alibaba cloud to maybe servers in the individual countries. That way you don't have that sort of geopolitical optics of, hey, whatever videos are occurring, let's say in America, are going, to be reviewed by the CCP first. So that sort of concern, at least they were trying to address, broadly. This is a great answer in terms of helping me, appreciate what you think is an unrivaled company that could be growing very quickly in the years ahead. So I appreciate that call for ByteDance. Let's do lightning round on, let's say, some of these other big platforms out there. Your thoughts, quick thoughts that come to mind. So I have to ask, Alibaba, what are your thoughts there? Quick thoughts.
Alibaba, I still think they're a very strong company. I think, especially with the incident this past weekend on their sexual harassment, I think that they need to maybe revisit some of their cultural aspects, which is a risk factor for the company. But I think they're still very strong, especially when you look at anything in commerce in general, e-commerce and offline commerce. Any interesting idea you might have thought of, you will see that Alibaba has started doing it probably like 5 years ago. I can almost guarantee it, because they are very, very strategic when it comes to this part of their business.
Got it. How about Baidu? We'll knock out a few names just because I'd love to hear, and folks are regularly asking about these.
Oh, Baidu. I think they basically said we're going to be autonomous vehicles. So that is that is their big opportunity. I'm under the impression that they kind of just let everything else go. So we'll see. But it is a huge and transformative opportunity if they can get there, right? They have some interesting strategies working with local governments and building out infrastructure in addition to working on the vehicle itself. We'll see if that works.
Okay. Thoughts on Tencent?
And
I recognize these are tough questions, because you're talking about like several $100 billion companies.
Right,
Tencent has so many different things going for them. So this is sort of like a Rorschach test of like what you think is of these companies. Quick thoughts.
And again, it's like 1 or 2 sentences. So my favorite part of Tencent is still WeChat. I think it's just built like the best ecosystem in the world, really. The ecosystem built. And what's really interesting is that specifically WeChat is one of the few apps that's really held on to a more balanced approach of people powered versus algorithm powered. They're both, to be honest, but ByteDance, for example, has gone all in on completely algorithm powered, right? And has achieved a lot of success. And I think it takes a lot of willpower and a lot of belief in your own a lot of faith in your own beliefs, I guess, for Alan at WeChat to say, no, we're not going to go for like the prettiest metrics. We're going to go for this sort of long-term vision I have about how people want their online digital experiences to be. And even though I think ByteDance is a great company, I'm actually more on the side of Alan. I really think that, pure algorithm and sort of pure engagement might not be the experience that we all want in a few years when it becomes more obvious.
Got it. And how about Pinduoduo?
That is probably the company I have most question marks about. They're very mysterious. I think I am, if we were to use Uncle Peter's framework, right, of the 6 counterparties, and I think that they have not scored that. I would say a lot of Chinese companies haven't scored very highly at all, but I would say that Pinduoduo is probably even lower than some of the other companies. I do understand that they fulfill a niche, which is sort of like the time-rich, cash poor, rural Chinese consumer that is just starting to, buy things online, that this is the right price point for them, that they don't care about like the brand, and they don't care about counterfeits, etc. But I think in the long run, that's something they're definitely going to have to fix. Not even the long run. There's a lot of noise about that already, right? So we'll see if that works out for them. I do think they know this is a problem, though, and they've really gone all in on agriculture, which is another great opportunity in China. But yeah, I just don't know how investors all think about this.
Yeah, you did a wonderful podcast on community group buying in terms of
Mhm.
agriculture. So I highly recommend folks listen to that just because it's so thoughtful. So thoughtful. So let's do bookends in terms of Pinduoduo's one end, maybe JD would be the other in terms of more of a focus on authentic goods. What are your thoughts there?
On JD, right? Okay, right. Because I remember you're a JD shareholder. I think JD's strongest moat is their logistics, right? So they're like one of those companies that has convinced shareholders early on, or actually I should say their shareholders convinced them, because I think their early shareholders were like, you need to build this moat from logistics, that they almost have like a pretty large margin of error. Like they can kind of mess up a little bit, but because their strategy is so good on this aspect. So yeah, and like you said, they have built up a lot of trust with customers in terms of authenticity. That being said, I think there are still, like, it's funny because at the beginning of this conversation you mentioned about JD, and we're talking about Alibaba, the sexual assault scandal, and I've been talking to a couple of reporters about this, and like 100% of them asked me like, so this Alibaba sexual assault scandal, but that JD one was never resolved. Do you think we're showing progress in China because that one was never resolved, or I guess it's still ongoing, and this one is getting resolved much more quickly? So
got it. Well, I don't want to end on that note, but Ray, you are just a wealth of knowledge. It's a real pleasure to be able to listen to. I want to respect your time here. So anything else you want to call out? I highly recommend viewers, check into your podcast, read your Twitter. That's Tech Buzz China for all the folks that haven't checked in before. Ray, yeah, you have anything else you want to say?
No, I don't. I just think that there is, well, I guess what I would say is I think there are a lot of voices now talking about China tech because of the recent volatility. And I would encourage those of you who are sort of more long-term shareholders to look more and more at original firsthand sources, right? Instead of secondhand, even though I include myself in the secondhand, but I try to always link the firsthand source, because I think that is, especially when we're talking about something like policy, right? You really want to read what exactly is being said. And now machine translation is good enough that that's what you should do.
Awesome, Ray. This was awesome. Hopefully we'll be able to do this again soon.
Yeah. Thank you so much for having me.
Thank you so much. This was great.